Welcome to the deep dive. Today, we're digging into a really dramatic story, Plasma XPL.
Oh, yeah. The blockchain that promised so much. Zero-fee transfers backed by Peter Thiel.
Exactly. Supposed to be a game changer for stablecoins, but then it just cratered, like 56% down within 4 days of its launch back on September 25th.
It's pretty wild. And the big question, the one you're probably asking, is how? How does tech that seems genuinely groundbreaking, solid stuff, end up in this kind of market chaos right out of the gate?
Right. It just doesn't quite add up on the surface.
So that's our mission today, really, to dissect this kind of dual reality. Was it just a messy launch, some kind of execution fumble?
Or something more fundamental.
Exactly. This
Yeah.
thing had a $2.4 billion market cap at launch. We need to figure out if this is genuinely the future or if maybe the tokenomics were, well, designed for something else, like an $8 billion exit strategy, as some critics hinted.
Okay, let's start with the good stuff. Why were people so hyped? The tech features, you have to admit, look seriously impressive.
They really did. True zero-fee USDT transfers, that alone is huge.
And fast. Sub-second finality, EVM compatibility, stuff developers look for.
Plus the Plasma BFT consensus mechanism. They were talking over 1,000 transactions per second. You need that kind of speed for stablecoins to really work at scale.
And they seem to deliver, right? Didn't they lock like $2 billion in stablecoin liquidity on day one?
They did. That's the paradox here. The tech was delivered, the infrastructure solution seemed real, but the price action, completely detached.
So XPL hits $1.70 on launch day. Pretty strong start.
Yeah, but just 4 days later, it's down at $0.74. That's that 56% drop.
Ouch.
And now it's hovering around, what, 0.41 cents? So like a 75% drop from the peak. Even with decent trading volume, around $320 million daily, the price just got hammered.
So what went wrong? This is where it gets murky, right? The token movements before launch.
Right. Blockchain analysts, the on-chain detectives, they spotted something pretty quickly.
What was it?
About 600 million XPL tokens moving from the team's vault straight to big exchanges, Binance, Bybit, OKX. And this is before the public launch.
That sounds, well, it looks a lot like insider dumping, doesn't it?
It certainly raised eyebrows. Big time. Especially with Thiel's name attached, you'd expect maybe tighter controls, better governance.
So how did the team respond?
Well, the CEO came out pretty fast with a denial. But this is where, the language gets interesting. Call it word games.
Okay.
He said correctly that the team and investor allocations were locked. These make up half the total supply, 10 billion tokens in total. And they had a 3-year vesting schedule, 1-year cliff. Standard stuff.
But there's a catch, isn't there? What didn't he mention?
Exactly. That careful statement completely sidestepped the ecosystem allocation. That's another 40%, 4 billion tokens.
And were those locked?
Not all of them. Turns out 800 million tokens from that ecosystem pool were completely unlocked. No vesting. Tradable from day one.
Wow. So 800 million tokens could have hit the market immediately.
Precisely. And that lack of transparency, that massive chunk of immediately liquid supply that nobody was really talking about, that's why people called the launch execution chaotic. It spooked the market.
Okay, that makes more sense of the price crash. It wasn't just launch day jitters.
Not at all. It suggests a huge supply overhang right from the start. And look, the risk isn't over. Only about 18% of the total supply was circulating at launch.
So there's more dilution coming.
A lot more. The really big unlock event is scheduled for 2026. That's when around 60% of the total supply is set to potentially hit the market. Team, investors, the rest of the ecosystem tokens.
Yikes. That's a massive amount of potential sell pressure down the line.
It's a ticking time bomb for token holders potentially.
So wrapping this up, what's the takeaway for you listening? It feels like a real conflict here.
It really is. You've got technology that seems genuinely useful, solving real problems for stablecoin infrastructure. Thiel's involvement suggests some long-term vision, perhaps.
But on the other hand, the token distribution, it was opaque at launch, arguably structured in a way that let a huge amount of unvested supply flood the market.
Yeah, and it shows that even with brilliant tech, the token holders can still, well, get wrecked by the supply dynamics. The tokenomics matter just as much, maybe more in the short term.
The tech might succeed in the long run, but early token buyers took a massive hit.
And that forces us to ask a tough question, right? If solid infrastructure like this can get hammered because of opaque tokenomics, how often does that happen? How much does a project's success depend on its code versus just clear, fair token release schedules?
Something to think about.
Definitely. Use this Plasma XPL story as like a lens. When you look at any project, dig into those lockup schedules. Ask the hard questions about who owns what and when they can sell. Don't just chase the hype, keep questioning.